Thank you for joining us at XM.com for the Weekly Outlook. I'm Christina Marujos, and joining me today is Senior Investment Analyst Rafi Boyadjian. Of course, we'll be having a look at the week ahead. Now, it's going to be a crucial week for the UK and the Brexit, of course. UK and European Union will try to strike a deal at the EU Council on October 17th and 18th. Now, how do you see that panning out, and how do you think the pound will move this week?
Well, we did finally saw some positive progress in the Brexit talks. Of course, those talks were close to collapse early in the week, but following that meeting between the UK and Irish Prime Ministers, the two leaders now see a pathway to a possible deal. So at the very least, that has created a positive backdrop going into that EU summit next week. Of course, even if we do get some outline of a revised deal, we don't know whether or not they would have enough time to work out all the details. So Brexit extension is still possible, but apart from what's happening on the Brexit front, we also are going to have plenty of UK data coming up as well. We're going to have the UK jobs report, inflation and retail sales for September. Now, data this past week showed that the UK will probably avoid a technical recession in the second quarter, but we could see, if we were to see some weakness from next week's numbers, that could perhaps take the shine off the pound, which has surged back above the 1.25 level against the dollar following those positive Brexit headlines.
And speaking of a lot of data, China is going to have a busy calendar this coming week. And even though U.S.-China trade talks resumed earlier this week, the data to be released is forecast to show that China's economy has slowed down in quarter three.
That is right. We're expecting a further slowdown in the Chinese economy in the third quarter to 6.1% on an annual basis. But that's still pretty much in line with where everyone thinks China's economy is headed amid the ongoing trade war with the United States. We're also going to have monthly data on industrial output and retail sales. Those are expected to have improved in September, so that those could provide some comfort to investors if we were to get perhaps slightly weaker than expected numbers for the GDP headline figure. But of course, the focus is still very much on those trade talks. We did see some progress this week. Whether or not that progress will hold, though, that remains to be seen.
Now, moving into the United States, it's reporting retail sales this coming week. It is, of course, the main driver of its economy. Do you think that worse than expected figures could push the Fed to cut rates at its next policy meeting?
Well, that is certainly possible. This week we saw softer than expected producer and consumer prices out of the US, and we had Jerome Powell, Fed chair, speaking early in the week, where he did say that the Fed will act as appropriate if we were to get further weakness in the US economy. So if those retail sales numbers do come in below expectations, and given the fact that retail sales is such a big part of the US economy, we could see rate cut odds for October getting a significant boost.
And finally, moving down under, the RBA and RBNZ are widely expected to cut rates again before the end of the year. Therefore, employment and inflation data out of Australia and New Zealand will be watched very closely. What do you think we'll be getting out of these reports?
Well, for Australia, we're expecting positive employment growth for September, but nothing too positive that would dampen rate cut expectations. Where markets are still pricing possibly one more rate cut by the RBA before the end of the year. For New Zealand, we're going to have quarterly inflation numbers. We're expecting inflation to have fallen to 1.4% in the third quarter, and so that would almost certainly confirm a rate cut by the RBNZ at its November meeting. We saw both the Aussie and the Kiwi rebounding this week on the back of those positive trade headlines and improving risk appetite, but that rebound is possibly at risk from next week's data.
I see. Rafi, thank you for joining me today.
Thank you.
And thank you for watching the Weekly Outlook here at XM.com.